It is tax season there, and there's some important things to keep in mind as you begin filing, and we're going to break down some of the myths and what are truths. Dr. Stephanie Yates with UAB Collat School of Business joins us now with some advice on that. Good to have you with us this morning.
Thank you. Great to be here.
Yeah. Well, let's start with the first, because a lot of people think, oh man, I'm going to get a big refund this year. That's not always something to celebrate, is it? Explain why.
Because that means that that's money that you could have had throughout the year to do things with, invest, save, plan vacation, whatever it is. And so the goal isn't necessarily the big refund. The goal is to withhold enough to match your liability, unless you're one of those special filers who's eligible for big credits that you really can't control.
Right, and so your message there then is to check those W-4 forms, right, to make sure you're taking enough out.
Yes. Yes.
And basically you want to break even, because if you get that cut, like say $2,000, that money could have done a lot better in a savings account.
Yes. Because they're not going to give it back to you with interest. Yeah,
the government's not good at financing your money and putting in an investment. Yes. All right, what if you owe money? Oh my gosh, I failed.
Not necessarily.
Not necessarily, okay.
Take that as a learning experience. So if you owe money, that doesn't mean you did something horribly wrong. It could mean that something changed in your personal life and you just didn't plan for it. Maybe you had a little extra income that maybe wasn't taxed. Maybe you got a raise. Maybe you had a little side gig that you didn't plan for. Maybe there were just changes to the tax law that you didn't account for. So figure out what changed and then just adapt.
Some people file late. Why does that buy them more time, or is that a mistake?
So that's another myth, thinking, oh, well, I'll just file in May or June so that I can save up the money to pay the bill or have more time to take a look at that. The IRS does not like that. They want you to file on time, and it's very easy to get an extension if you just can't get it done. So file on time, April 15th for most of us, or if you can't, file for an extension so you get that automatic 6 months to get things figured out.
And I would, go ahead.
I was just going to say, but if you file for that extension, that doesn't mean that you don't owe. So if you owe and you file the extension, you might still get interest and penalties charged.
They seem to be more lenient if you file for an extension, you know that you're not going to owe, right? All right, so mistakes though, do those always trigger an audit?
No, not necessarily. For most of us, if we make a mistake, we just miscalculate, or we did have a little extra income that we forgot about, but whoever paid us that money told the IRS and they're expecting us to pay tax on it. The IRS typically, in those cases, is just going to send you a notice and say, hey, we noticed an error in your return. We calculated what it should have been for you, and here's how much you owe. And that's it. You pay the bill and you're done.
All right, well, hopefully that clears things up for a lot of folks out there. Dr. Stephanie Yates, we always appreciate it. Thank you.